is okay. So here we are at the daily chart, right? Let's take a quick look at the monthly chart, right? And you can actually see that on the monthly chart, right? We are actually, in fact, having a nice, upward run, right?
The
And
monthly
what
looks
looks like sideways motion on the daily chart could just be a small blip back down to the averages on the monthly chart, right? So let's keep that in mind, right? And so when we do, oops, let me just get, people are joining in. Okay, here we go, admit. Okay, there we go. All right. So yeah, keep in mind that yeah, what looks like sideways on the daily and the weekly charts could just be a blip on the monthly chart coming back to the averages, allowing the averages to kind of catch up before another up run, right? So when I look at it that way, right, let's also check the weekly chart really quickly here on the um yeah, and you can see on the weekly chart, we are actually kind of going sideways. You can see the ADX is lower than 20 here, right? And we are kind of overbought, right? But again, right, much of what happens is just a quick blip down to the averages, before it heads back up.
yeah. I sent you a quick screenshot.
Oh, sure. One second. Let me check more people who are coming in here. Let me admit all of them. Okay, here we go. Let's close that out. Okay, let me see the screenshot you sent. Okay. Sorry, not this one, right? This one? Yeah. Admit. Yeah. Okay. Is this what you're talking about, Henry?
Yeah, it's
Yeah.
the weekly view of the SPY. So
Yes.
the market's really quick to start panicking.
Yeah, yeah, yeah. That's what I'm saying, right?
The
So,
upper panel, you can see all the different
yeah,
time frames and how they've performed percentage wise. So all of them
exactly.
are green.
Right. My one of my plans is to start running the scans on my program, right? On my personal, Python program to give kind of a multi scan, a multi time frame view of the various indicators like the ADX, um, the moving averages, showing, upward or downward and things like that, and the squeeze, right? That's really the main thing we need to know in this situation, right? So how are we doing, right?
Yeah, it's
Now
good.
with
It's
the
good to
daily
take a
chart,
deep breath and take a bird's eye view, zoom out.
yes,
What
yes,
zoom out when in doubt.
yeah, zoom out, right? So if you're like, oh my God, the Dow went down 400 points or 500 points today,
I'm gonna
right?
sell my 401k. I'm gonna sell everything. I'm panicking.
Yeah, but then when you look at the weekly chart or the monthly chart, it's just like, oh, it just move back to the averages, right? So, keep that in mind. Now, of course, you should still buy protection, right? On the daily chart. So when we buy protection on the daily chart, right, it's mainly on, a short-term trade, right? We do maybe a couple of weeks to maybe maximum a month when we buy the puts, right?
Yeah.
And then whatever we do end up buying, right, as far as protection goes, right, we sell it off when we hit a support, we hit the averages, or if we are lucky, something like this where it goes down to the bottom Bollinger, definitely that's the max, right? So and that holds true as long as, so this is the weekly chart, right? So let me shift back to the daily chart. So since we're doing, we're buying these things on short-term trades, right? Um, when the daily chart is showing a sideways kind of motion, right? We do not hold it for too long, right? The only time we actually might consider holding it longer or getting out and rebuying again is when we actually see a downtrending situation with the ADX going up, and the moving average is crossing over to the downside, right? Indicating that this is a more serious situation in development, right? So in the end, right, we don't necessarily care about the news. We may make a mental note of what's going on and what could cause problems and things like that, right? But the ultimate situation here is the ultimate lesson to take out of this is trade what you see. So if you're seeing like, oh, look, this is, an upward motion, right? ADX is higher than 20, right? Okay, if the ADX is higher than 20, I'm not trading against that, right? Where you see the green is above the red, right? So if I kind of magnify it here, right? Okay, if the ADX is higher than 20, right? I'm going to be looking for a drop back to the averages, right? Now, of course, sometimes what could happen is it drops hard and you get a little bit of a blip there, right? But if you see a green day after that drop, right, buy it immediately.
Yeah. Yeah,
right?
that's great. Yeah, I think it's a good practice for everyone in the chat. Practice with just looking at SPY and the ADX.
Yes.
And then just look at those two one indicator and then the market.
The SPY, ADX, and once you guys feel more comfortable, you can look at the squeeze as well. Right? You can look at the squeeze. So take a look here, right? This was around the time when the ADX.
One thing I wanted to mention on the Yahoo Finance. I guess if you guys want that same setup, type in your email in the chat, and then we can send you how to get that set up on Yahoo Finance in case you want to have that tool.
Yes.
But we use TradingView as well, but the free TradingView only allows, I think, 1 or 2 indicators.
Yeah. So if you're not wanting to subscribe to TradingView, if you're not wanting to subscribe to TradingView, you can use Yahoo Finance. The only problem is Yahoo Finance does not have the squeeze. I would ideally like a singular, place where I can just have all of these things in a row, like this plus the squeeze, right? So in one snapshot, you can just be like, oh yeah, that's what's going on here, right? But it depends. If you're paying for TradingView, you can have multiple, multiple indicators there, right? If you're not paying for TradingView, at least for now, Yahoo Finance is free, so you can use kind of both of them to make the snapshot.
That works on any browser, on your work browser, home, on your phone. I think it works on your phone as well.
Correct. It works on the phone as well.
Yeah, just type in your email address and we'll send you the setup for
Sure.
financing.
Well, actually, you can also take a screenshot. I'll leave this up here for just a couple of minutes, right? You can take a screenshot of this. Then okay, this is the RSI, okay? So for those of you guys for right now, right, I'll just tell you, RSI, 9-period RSI, overbought is 65, oversold is 35, right? So make sure you can note that down. MACD, everything is default. You don't need to change anything. So just look for MACD and this pops up. Then you have the Bollinger %B, right, which tells you how far above or below the Bollinger, or where the price is in relation to the Bollinger, right, which are these black lines right there, right? And then of course the ADX, right? Again, ADX is default settings, 14-period. Right? And then what I have in the chart itself, couple of things, okay? I have the Bollinger Bands. I have the Keltner channels, which are these red ones right here. I have the 21 EMA. I have the 8 EMA, right? Because that's an early warning right there. And then this blue line right here is the 50 SMA. And the red line right here is the 200 SMA. So make sure you guys note that down.
What's up?
As well.
Listen to a seminar. What's up?
So
what? Yeah. I'm going to see like around 8 o'clock, 8:30.
Okay. So, yeah, that's the general setup that I have here in Yahoo Finance, right? Again, all indicators are free. You don't need to buy anything. Take, um, or unlike some Thinkorswim indicators, right? You don't need to buy those or take a course for them, right? Which actually a lot of these Thinkorswim indicators do have that, right? Because a lot of them come from simpler trading. But yeah, anyway, this is what I'm looking at, right? So, if I'm looking at trade what you see, right, I can see, okay, is it trending or is it sideways? So if it's trending, right, and it comes back and hits the averages, right, and I still see, it's above 20, it's hitting the averages, right, I'll either buy at the averages or I'll wait for it to be a green day the next day and buy that, right? That's also something. And then take it back up to the, Keltner channel or the top Bollinger, take it off, right? So that's another method that you can use for trading. Of course, if it's sideways, I've told you guys before, you can draw the kind of the support and resistances, right? And it is possible for the SPY and the QQQ to kind of chop around
Yeah,
in
I
a.
had a question, and on probably
Mhm,
the audience has the same question.
mhm,
When we're um when we're trading under the 20 ADX,
mhm.
what does reversion to the mean mean?
Oh
Like
yeah.
what kind of
So
trades are
oh yeah,
higher
yeah. I explained this in the last one,
yeah,
right?
higher success?
But for those of you who weren't there, and kind of as a review, right? If the ADX is if the ADX is lower than 20, what you do is you want the RSI to be above 65 for puts, right? The RSI should be above 65 and the Bollinger percent should be above 90. So if those things are true, then you buy the puts up to the averages, right? And again, if you're lucky, you can get it down to the bottom Bollinger. But my strict cutoff point is as soon as it hits the 8 or the 21, right? Depending on distance, right? I take it off.
So which one would you say is the mean? The
The
exactly
21 is the mean. The
21.
21 EMA is the mean, right?
So essentially, someone could just use Bollinger Bands and the 21, and then that's
Yeah,
enough.
Bollinger Bands, Keltner channels, right? Depending on what you guys like, but because the Bollinger Bands can, be a little bit more volatile. Sometimes they're very close together, sometimes they're far apart, right? So you can use the Keltner channels as your entry and exit too, right? So I mean, your the Keltner channels can be the exits. Sorry, the entry at 21 and exit at Keltner channels, right? Uh, Conversely, you
Okay.
can also use the Dorvis box support and resistance, right? So you can kind of see what happened, here, right? So this was the situation where the ADX turned into into the RTM situation where it became lower than 20, right? So you can use the support, the resistance here, or the resistance of the Dorvis box, right, which is also another thing,
It's a
right?
dog.
And
It's a dog.
Yeah, I sent you a
Mhm.
screenshot when you're ready to go into
Sure,
vid later on.
yes. And see right here, you can also see, it went down to support, it went below Bollinger Bands, and you could also see that the next day, or at least a couple of days after it came to that support, right, it started to bounce off, right? So, once you see, it went from red to yellow, all right, let's see what happens, and then you can probably take it back up to the averages or to the top Bollingers. Depends on how brave you're feeling, right? And how many contracts you buy, right? So, if you, assuming you can afford to buy 10, right? As soon as it hits the averages, maybe you take off like 5 or 6. And if it keeps going, right, you take off the rest depending on your, risk tolerance.
For this
Right.
one, Could you redo like the past three Darvis boxes just so the audience
Mhm.
can see how to draw Darvis boxes on their
Oh,
own chart?
yeah, I just added this particular one right here, right?
It's
But on trading view, right? Well, uh, on I suppose on the Thinkorswim you can actually buy the Dorvis box or something like that,
oh
right?
this one's just a free one,
But
right? Just a free
yeah, this particular one was one I drew myself, right? And to draw it, you go see right here, right? This is the where it says geometric shapes and pick rectangle, right? And then when you pick the rectangle, you can draw the Dorvis box as you. So I can just demonstrate it right here. Just click and drag,
And so you're choosing the highest point
right?
of the candles and the lowest point of a low candle.
Right,
So
exactly.
so this
Right.
kind of gives you your trading in a range.
Yep.
And then
So
so
if the main swing of the box is from low to high, I make it purple. If the main swing of the box is high to low, I make it yellow. Right. So for those of you guys, who see the different colors, right? In here it was high to low, and here too it was high to low. So I made I kept it as yellow.
yeah, a good
Mhm.
exercise when you guys are offline and maybe preferably when market is closed, go over all the charts, all the
Yes,
stocks that you like, and keep drawing Darvis boxes. If you're gonna do this over 25 charts, 50 charts, 100 charts over a weekend, and then later on it'll become like second nature. And then so
yes,
when to the trading day Monday, you have all your ranges already drawn
that's
and
right.
and drawn around.
Mm,
Right.
I have a question.
Uh,
So this is the Darvis box is basically giving you your entry and exit for the trade. As for the actual put, are you buying it at the money or
um, as close as possible. If
okay,
if if not at them, if we can get in the money, it's better, right?
right.
Because the delta is higher, but even at 2 or 3 weeks, it tends to be expensive for a lot of people,
Yeah.
right? Because it becomes like $1,000 or $2,000 for those, even if it is 2 weeks out, right?
right.
So we try to, get it maybe a little out of the money so it's cheaper, right? So something like, a couple of strikes out or, out of the money so you can get the um, cheaper options there.
Right.
Mhm.
And sorry, one more question.
Mhm.
If you go back to the view with the ADX,
Oh, yeah. Mhm.
just a quick question on clarification on that.
Mhm.
I see that there are multiple traces here. Are those different periods or
Uh, which, wait, what? Which,
the ADX is the bottom trace, right?
yeah, this one, yeah.
So I see a green, red, and
Yeah.
black
Oh, yeah, yeah.
traces.
So black is the value of the ADX, right? It tells
Okay,
you the strength of the trend, right? The black line is the one you care about whether it's above or below 20,
right.
right? The red and the green tell you the direction. So if red is above green, it's in the downward direction.
I see.
It, and if green is above red, it's in the upward direction.
So it's kind of like the derivative.
Yeah, yeah.
Okay, thank you.
So that's all. Okay. So yeah, you
Oh,
can see right now.
one thing I wanted to add for
Mhm.
puts, normally the style that we've been applying the puts is to protect existing positions. So
Yeah.
what we're looking at, we're not bearish. We don't look for just, hey, we only do puts. It's kind
Yes.
of to protect drawdown. So say if
Yes.
you might have two calls, you have one in Tesla and one in Boeing, and then
Hmm.
you have a weekend like this weekend where we have government shutdown, which got decided over a weekend. So
Hmm.
when that news happens over the weekend, we can't do anything about it. We can only wait till Monday and then
Yes.
see what the aftermath is. So
Like
so
I said though, right? Make a mental note of any news, right? But don't necessarily make your trading decisions on the news because by the time it comes in front of us, it's already really been acted upon,
Right.
right?
Yep.
So,
yes. So
uh,
the sizes of puts, they're not
Mhm.
10 contracts, they're not 20. It's just kind of whatever to cover your current
Yes.
holdings, you know. So
Yeah.
you kind of have to adjust it based on, okay, well, I don't have a lot of I don't
Mhm.
have a lot of options open, so I might not need to put a protective put. But if I had some larger positions, then it's a good time to put in
Yeah,
some.
maybe you buy like 2 or 3 or something, right? Depending on how much you have in terms of your long positions, right? Whether they're calls or whether they're even shares, right? Um, it's all dependent on that.
So if it's to protect other or potentially other open positions,
Mhm.
why not buy puts in the position itself? Like say Tesla, why buy it in SPY?
You can buy it on anything you want. Um,
Okay.
but
You're just using
SPY,
SPY as an example right
yeah,
now?
yeah.
Okay.
You can actually buy it on anything you want, but myself and Henry, we tend to buy it on the indexes
Okay.
more than, because individual companies can
They
go
get
up
their
or
own
down.
news. Yeah, they get their own events.
Yeah,
And
they
then
have
like
their own
a
problems or their own, like, if you're buying put on, say, Netflix or whatever during earnings or whatever, right? And it
Sure.
turns out to be really good, right? Then, even if the SPY is going down that day, right, you'd still lose out on that.
it's kind of like hedging at the entire market. So
Mhm.
so since that one put could be covering you for three different positions, if that news affects the market, then it's going to affect your three stocks or your three
Yes,
holdings.
Right.
So
exactly.
so it takes all the nuances away, like all the weird stuff that happens, like insider sales, that can only happen on an individual stock.
Right. And because this is an average, right? It's not as, movable in that sense, right? If it goes down, it carries everything with it. Um, and
Yeah,
obviously if it goes up, it carries everything with it there
yeah,
too.
it takes the luck element out of it.
Yeah. So that's why we do this. But yes, you can actually buy it on anything you like, right?
Yeah,
It can be,
and
yeah.
we'll announce it too if we take a protective put. We'll announce it into the group chat so you guys can see, like, okay, hey,
Mhm.
we took a couple protections. So
Yes. So, I mean, yeah, and you can see even right here also, right, coming back to this, that when we do reach, kind of this top extreme, we do tend to come back down. And when we reach the bottom, extreme, we do tend to come back up. Sometimes we go far enough above averages too, right? But my thing is, I take it out at the averages so that again, to remove the whole luck element from the thing, right? So my target is like, okay, as soon as it comes and hits that point, I'm done, right? So yeah, um, I guess the gist of the strategy here, right? Um, and again, right, like I said, keep an eye on the weekly and the monthly charts also, right? Because what looks like this is a long sideways trend here, right? But if you saw the weekly chart and the monthly chart, it doesn't look as, terrible, right? So there is potential, right, for this thing to go back up and for this to also go up, right? At the moment, right, I'm cautious about the various things happening in the market, right? But again, right, I'm only trading what I see, right? So if this is sideways, right, I'm using this sideways motion to buy, the protection that I need, right? Or to to buy calls when it's gone down to the lower extreme, right? So you can see that also has its uh, move up as well. So now if I can uh, get it to where it goes down to the bottom Bollinger here, and I can see the RSI is red, and this thing is still below the 20, right? Okay, now I can see here, right? And I'm like, oh, if the squeeze turns from red to yellow, great, I can take that too. right? Especially if you can see, as you can see here, right, it was not only below Bollinger's on that thing, and the RSI showing, oversold, but also the squeeze was red and turned to yellow, and it was coming off of a support from the Norris box too. So that actually ended up being a really good, move up, right? And again, if you're not comfortable buying right at the bottom here, you can use the candlestick, patterns to determine your entry along with the transition from red to yellow. So, anything you want to add, Henry?
No, I think that's good. We can go into BPS, PX, or VIX, whichever one. Down for either or.
Okay. Oh, yes. So looking at, the VIX, right? So, of course, one of the issues with the VIX right now.
Favorite indicator is the VIX.
Yes, as far as volatility goes, right? So it tends to be, generally speaking, opposite of what the SPY does, right? And you can see the comparison here, right? And by the way, on TradingView, you can add the comparison, right? So that's another, I guess, educational thing here. And you can, I think, hold on, let me see where to do it at, not here. Oh, okay. Compare or add symbol right there, right? So you can click on that and then, add the symbol to that. And, for me, I put the SPY for that. And so, yeah, there you go, right? Now, let's go back here, right? And we can check on the VIX, right? So, one of the things to check for the VIX here, right, is the options prices, right, within a week to 2 weeks of where the date you're checking in, right?
Also, the crystal ball.
Yeah, it's I mean, I wouldn't call it a crystal ball necessarily. I would
It's
just
just
say
a
that,
nickname for it.
yeah, people call it that. People who trade, like the expert traders, so to speak, right? They call it a crystal ball, right? But it's more of a, what do people actually expect to happen, right? So if we go maybe a couple of weeks out, right, like say February 18th or 25th, right? And then you can check the prices of the options which are given right here, right? And you want to check like at or near the current area, right? So 17 to 17.5, right? And you can see right there it's 2.55 to 2.3, right? And if you look at the puts, right, at the same area, right, you can see the difference here, right? At the money, you can see this is 0.5 and 0.8. So
that's like 4 times lower.
4 to 5 times,
Yeah.
right? Difference between between the put call and the puts, right? So
more people buying calls.
Yeah, so the calls are in more demand than the puts are, and you can see that with the prices here, right? Like near the money prices, right? So what that means is that at least the people who are demanding the calls, right, expect a market drop, right? Now, here's the thing. Does that mean the market will drop? Not necessarily, right? It's just that the people who are looking at it expect it to do so, right? So it's just something to make a mental note of. That's all, right? It's not really even, I wouldn't even call it a crystal ball, to be honest, right? And when you think about it, right, when the market has been going up for a long time, at some point people expect it to drop, right? And many of those people are gamblers, right? So keeping that in mind, right, just make sure that you just make a note of it and not necessarily base trading decisions on on this particular quote unquote crystal ball. So
Yeah, you can kind of use it as a weighing scale.
yes,
Where's
it's like,
the
oh yeah, the
kind of like
market's
putting
been going up for a while.
your toes in the water kind of to see what it feels like.
Exactly. Right. And it's like, oh, people are expecting it to go down. So what should I do? Right. Okay. So what I should do is I should check my positions, right? Check, okay, how many calls do I have? How many, shares do I have, like in terms of long positions? And then determine, what's going on with the market itself on the daily, weekly, and monthly charts. Right now, again, because usually these things are short term, right? These protections, right, so to speak, the put protections and even short-term calls, based on reversion to the mean, they are usually going to be short-term positions, right? So because they are short-term positions, you can use the daily chart for those. Now, if you're going to do anything long-term, right, the weekly chart and the monthly chart are generally better. However, you don't always get buying opportunities there. So that's another thing I will say as well. So
Anand, what do you think about the VIX values? Like, say VIX is at
yes,
15 or 16.
yes,
Usually the market's pretty calm when it's like
yeah.
that.
So here's the thing, right? Like you can draw these lines here based on what is going on with the Fed. So if the Fed is expected to either hold the rate or lower the rate, right? We are generally going to be in a relatively low VIX environment, right? Even then, right? It's not, it's not going to go to like, the single digits or anything like that, right? But generally, it'll kind of be going sideways like this for quite a long time,
You're
right?
showing the market's chugging upwards with that super
Yes,
calm VIX that you just showed right there.
yes. Now, if you look, earlier, right, on, like this time, 2022, right, you can see more volatility on the VIX in that situation, right? Like, so when the Fed is, raising interest rates and actually guiding people to believe that interest rates are going to be rising, for the near future or whatever, right? Then you will see a more volatile market, which also leads to a more volatile VIX.
Yeah, I've seen
Right?
different approaches when VIX happens on that time. I've seen
Yes.
some traders they just take a break. They
Yes.
take a year off and then they ignore all of that noise and they go back
Heck,
to the calm,
yeah. I mean,
which
you
is a
could do that
perfectly
too.
good strategy. It's perfectly good strategy. Yeah,
Yes.
especially for
And
the larger accounts.
exactly. Right. So during times when the market environment is, kind of steady, right, and the Fed is either holding still or, looking to lower interest rates, right? Uh, this is the kind of support and resistance that you can draw, right? Like above 22, 23, right? That's okay. That's going to be volatile, right? Around this bottom area, that 14 to 15 region, right, is usually where the support lies for that, right? So as long as it's in between here, right, nothing much to worry about. But if it starts to climb above that, and of course that will be accompanied by a drop in the market, which will lead to the ADX going up, right, above 20 to the downside, along with moving averages crossing over to the downside as well, right? In which case now you have a put buying environment, right? Of course, that should only last until the market gets to oversold territory. And I think I showed you guys how to look that up, right, with the BPSPX, right? So if you see that happening, right, like once uh, BPSPX goes below 30%, right, then okay, things are going to start slowing down to the downside, right? In which case, you can stop buying the puts and just wait for everything to kind of level out and start to move back up, right? And then you can start, going to the upside. So there you have it.
Yeah, it's a good routine
Mhm.
a good habit to check the VIX.
Yes.
Every trading session or the trading sessions that you're interested in placing trades, so you
Mhm.
have an idea of how wild the market is. If I see a VIX 16, I kind of
Mhm.
know, hey, things are fine and dandy. But if I saw a VIX 27, I'm like,
Yes.
oh, wait a minute, things need to settle down a little bit, maybe
Mhm.
before I jump in a long call, for example.
And
So
sometimes look at this, right? Like this was the tariff news, right? It jumped to like 60, right? So that's something that can happen, right? Like if it jumps up to, that 60 region, right? You guys of course saw COVID, right? VIX actually jumped to the 80s, if I remember,
which is huge.
right?
It's huge.
Yeah.
So kind of like the VIX weighs, they call it the fear indicator. And if it's 80, then it's pretty fearful. So only black swan event would hit
Mhm.
something like that.
That's right.
But lately it feels like anything over 30 is pretty big for VIX. So
Oh yeah.
sometimes the market gets spooked on, certain news.
Okay. Yeah, yeah, exactly. Right. So,
So if
someone has a question. Oh, sorry. Oh, someone raised a hand. Mary, right?
Hi.
Yeah. Mhm.
Hi. I came a little bit late. I was just wondering,
Mhm.
how far out for the expiration dates do you guys go out? Like if it's for a call, do you guys like
Oh,
have a
okay.
recommendation?
So for calls, right, we like to go as far out as we can afford, right? Like we try to
Mm-hmm.
get leaps for those, right? 1 year, two
Oh, leaps.
years,
Okay.
right? Now that is
Mm-hmm.
for long positions, right? For short positions, it's not as critical. You can go out for like a month or two, right? For shorter calls, right? And that depends on what's going on with the market itself, right?
Yeah.
Um, Now again for puts, right? We don't actually buy put, the equivalent of put leaps, right? Because puts are mainly insurance; they are mainly protection, right? So we don't
Mm-hmm.
usually tend to buy, 1 year out put, uh,
For the
yeah.
Okay. No, I
Um,
got it. Thank
Not that
you.
it can't be done or anything, but
It's a little bit more riskier.
yeah, it's riskier, right? Because of um, you know, the interesting thing is the market, right, tends to, kind of go slowly up, right? And, actually you can see it, right? Let me show you with the SPY here, right? The market tends to kind of go slower to the upside, right? And even going sideways, right? It doesn't tend to do a lot. So keeping a put for a long time, right, is not a great thing to do, right? However, when it does go down, right, it does drop like a rock, right? So, puts really work well then, right? But they don't tend to be responsive during normal times, right? It's mainly like that's why we don't go so far out, right? Because when those shorter time frame puts drop, right? Um, and the other reason to buy the shorter time is because it's cheaper too, right? For the puts. So we don't tend to buy the protection for for too long, right? Maybe like 2 weeks out to a month out max, right?
Okay. Thank you.
Mhm. Yep.
Thank you so much.
Sure, sure, sure.
Oh
Of
yeah,
course.
and for VIX, when you see VIX spike, say 30, 40,
Hmm.
when do you start considering it cooling down or like back to normal, I
Oh,
guess?
yes,
Because
that's
that's actually a really good opportunity for calls.
yes. So here's the thing, right? Couple of things that you would want to look at is, okay, is the SPY at support? Is the, or is the or anything that I want to buy, right? Like, whatever it may be, Netflix, Nvidia, or, whatever you guys tend to like.
It's cheaper. It's cheaper.
Right? Yeah. So it's like, okay, what do I do? Right? So a couple of things you're looking at, right? One is, okay, is the stock or index that I want to buy at a support or below Bollinger's, or depending on ADX above or below 20, right? Has it come down to the averages or whatnot, right? Um, and then the other thing you're looking for when it comes to the VIX, right? And of course, you're looking for the BPSPX and all that to show you whether we are oversold or not, right? So here's the thing, right? In a situation like this, where it goes up to like the 60s, when you see this thing come back in, right, to the Bollingers, right, that's the time to start looking to buy, because that usually also coincides with the squeeze going to the upside too. And that people are kind of starting to, at least the smart money, so to speak, the institutions are losing their fear of buying, right? So when it starts to go back in, right, even here, right, you can see when it goes back in, right, you do see a little bit of a bump up, right? So yeah, that's the um, kind of the time to buy when you see, the drop back into the Bollingers.
Yeah, sometimes it takes a few days. It might not just be like, then hey, I'm just gonna go all in on calls. You kind of have to watch it and see
Exactly.
the VIX kind of behaving back to normal.
Correct.
So, depending on the like how bad the news is,
Mm-hmm.
the market is weighing how bad is that news. So sometimes it's kind of like a flash bad
Mm-hmm.
news, or it could be a dragging bad news that takes about a week. It could be
Or more, right? Depending
or
on the
more.
situation. Like if you look at the tariff news, right, that kind of actually took
Took a whole year. Yeah.
like a couple of months actually, right? Kind of started in February to March and then up to April, so maybe a month or so, right, where it kind of dropped again, right?
In that May, you can see the VIX cooling
Yeah.
down.
Right. So if you see that happening, and then you kind of check the daily and the weekly squeeze, right? If you see the weekly squeeze kind of going from red to yellow, right? Okay, it's like, all right, this thing is dropping, the weekly squeeze is coming back up. Okay, now is the time to buy. Take it.
Yeah, that higher low looks nice right there.
Right. That's another thing, right?
Yeah,
So once
it's
the
hard to
weekly,
spot. Yeah, because everyone's saying sell, the
yes,
thing's on fire, so it's hard to buy when that's happening and then
that's when you start getting, like in this region is when you start getting blood in the streets, right? Where people are like worried, right? Even Kramer in his show will start saying we are bearish, right? And it's like, oh yeah, that's the time we're like, oh no, we should all sell everything, right? But when the weekly squeeze on the SPY turns from red to yellow, right? That's and the Fed is not, raising interest rates, right? They're either holding or lowering, right? That's the time to start looking at opportunities to buy, right? And then on the days or the weeks that we are downward, you can buy some more, right? Because you know that generally speaking, it's going to shoot up after that, right? And then you can set your target as to where to sell and so forth.
All right, Anand, you want to do BPSPX and then maybe a couple of stocks? If you guys want to review a few tickers, type them in the chat.
Oh, sure. Yeah. Oh, let me check the chat, because we did have some things happening. Okay. Okay.
Chat's good. We're gonna email them
Okay.
the Yahoo Finance setup.
Oh, yeah. Oh, this is a good question. Right. This one where you bought an AT&T call, right? If it shoots up, right, depending if your value has almost doubled, probably good idea to take it out. Yes. Yeah, close that position. Good idea. Right, and then come back in. Okay, so yeah, we'll do. Okay, so we want to do NU and Carvana. Okay. All right. So let's check. Let's check BPSPX first, right? Like you were saying. And looking at the futures right now, I think things are going down, and I think that's due in large part because of the Bitcoin sell-off, right?
And
That
government
happened over the
shutdown
weekend.
or partial government shutdown.
Yeah, partial government shutdown, right? So I think that's kind of the big issue here, right? Oh, let me change the settings here. Because I think it always defaults to the secure search here. So let me set that as default. Okay. Okay. Now we'll look for BPSPX. Okay, here we go. Right. Here we go. BPSPX. Okay. So you can see right here actually that BPSPX has come below 60, right? Which means it actually has room to run both sides, maybe more to the downside than to the upside. But again, we don't always see downsides as much, right? Unless the Fed is, raising rates.
So,
yeah.
for example, Anand, what do you think of BPSPX at 15 or lower?
Oh, yeah. Again, the lower it is, the better, right? So if you see something like BPSPX going at 15 or lower, right, start looking for the weekly chart to change from red to yellow. Or if it's been going down long enough, the monthly chart.
It's a really good place for longs. You can go shopping
Yes.
at that level.
Right. So, I mean, we may actually luck out and this thing goes down to, to the 30s, right? Which will lead to quite a lot of buying opportunities. Now, if we do
More
see,
room to run.
yeah. Yeah, exactly. Right. So you can see right now, oh, look at that, right? The RSI has gone from overbought, right? Now it's at normal levels, right? So I'm going to be looking to see if this thing goes below 30, right? Now, if tomorrow, right, we see the SPY coming down, right? At this point, I'm not necessarily going to buy puts, right? Because as long as the ADX is below 20, right, I'm looking for this to maybe go down to the bottom Bollinger, maybe this thing to to kind of turn right, right? These again during a good Fed, Federal Reserve situation, right? For the most part, um, when we see a red to yellow on the daily, right, it's actually pretty good, especially if it has dropped quite far, right, on the daily chart. So I'm actually hoping that will, kind of happen here, right? Maybe this support will be broken through and we see kind of a red, but the ADX doesn't change appreciably to, to reflect that, right? It doesn't change appreciably in terms of going above 20, right? Because if that happens, that okay, now we need to trade differently here, right? So as long as ADX stays below 20, right, and this thing drops maybe through a couple of these supports, right, all right, now is the time to start looking to buy again, especially if that VIX goes back into the Bollingers, right? And that's where you can also maybe pick up a couple of calls. Right. All right. So, and of course, if that BPSPX is below, 30 there, that's a great, kind of buying opportunity if we see, a movement to the upside there, right? Now, let's go back to I think some people were asking about some companies. Okay. So let's look at NU first, right?
What happened?
Okay, all right, let's look at NU. Actually, this is kind of looking good, right, in terms of that upward movement, right? Let's check. So this is the daily chart, right? Now, if you're looking for longer term, right, I'm going to look at the weekly chart, right? and I do like the weekly chart here, right? Now, I personally might have liked to buy in, like when it broke that previous resistance, or tried to retest the previous resistance there, right? Pretty decent, long-term buy here, actually, right? Um, Now it's kind of above Bollinger, so I would actually, like, if I were to do a long-term buy on this, I would want it to kind of come down a little bit back into the middle right here into the Bollingers. And maybe there kind of buy it, right? Let's check what the ADX looks like on the weekly chart, the daily chart first here, and the weekly chart as well, right? And this is great, right? You can actually see that we have it above 20 here, right? It's actually at 25, which is actually a pretty decent, up moving company, right? So it's come back to the averages, right? Now, again, right, you can decide on this later, right? But it does seem to kind of go below the averages, kind of dip its head below the averages before coming back up. So you can either buy there or wait for it to kind of dip below here and maybe hit the 50 or so, or the bottom Bollinger, and then look to buy for short term, right? Now, if you were to look for the longer term buys, again, you want to go to the weekly, right? And you can see we are still kind of at top Bollinger territory here, right? So you want it to come at least to the 8, maybe the 21 there, and look to buy there. Because look, you can see the ADX here is also above 20, right? Which indicates a pretty good strong trend, right? So if you were to look for a long-term buy, you can just, kind of, do a set and forget. Like once it hits the 8 or the 21, set it and forget it. And then look for it maybe to either come back to the, top, or just hold it long-term too, right? So that's kind of the verdict on it, on that, right? And then I think someone else asked for Carvana. So
Yeah, this one I remember over the weekend.
yes.
There's some bad news, something about that their earnings were inflated by over $1 billion in 23 to 24. So that's some bad news, but the pattern looks okay, but they're just bad news that's came to light as of
If
recent.
that's the case, I would say be careful, right? It does appear to be at the averages now, right? Kind of dropped here from 470, 480, kind of close to 480 here, and seems to have come down to 394. This is a pretty big, looks like a pretty big drop, right? But again, because it's so high priced, right, it could just be, like that little blip where it just comes down and hits the averages, right? So we may also want to look here to check on the oops, sorry. There we go. Okay. Right. You will want to check here, right, on the squeezes, right? Again,
that's a nice cup pattern, but I like
yes.
to enter when it's yellow. Like this one I
Yes. I like that too, right? Like enter when it's yellow, right? You can see right here that this was the previous resistance that it hit around late 2021 before it went, all the way down, right? Then it started to come back all the way up, right? Now, when it attempted this, there are a bunch of areas where it attempted, to buy, right? Where it kind of went down, right? You can draw the supports and resistances on the daily chart, right? So you can see kind of the granularity of it, right? But you can see, right, when it kind of reached that 360 area, right, people sold off, and then after a few weeks of downtrending, it blasted off, right? So when you see the cup, right, and the handle, right, if the handle is squeezing upward, right, that's the time to buy, right? Even though again it might be scary because for a few weeks it went down, right? So again, right, I'm not liking this as much because we do see kind of the blue squeeze here, right?
The distribution.
So yeah, so and if the earnings thing is true, right, it could actually end up becoming a problem for it, right? So I would say wait for the for the cycle to finish, maybe, right? For long-term buys, if you're looking at short-term buys, again, we can go to the daily here, right? Um, yeah, for the short-term buys, right, you can kind of do it when it turns from red to yellow on the daily, right? And again, we can check over here to see what the ADX is looking like recently, right? We can see that the weekly ADX is pretty good, right? It's above 20. And the daily ADX, well, it is, but it's to the downside right now, right? Which is why I would say wait on this one, right? At least according to the strategy that I use. If you guys want to risk that, right, that's fine too. So, yeah. I guess, is there anything else? Let me check. Oh, SLV, that's silver, right?
Yeah, metals are selling off.
Yeah, metals are selling off right now, right? But
30
again,
days.
that may just be profit taking. So, keep that in mind, right?
Yeah.
Because look at this. It's been going up so much, right? And so a lot of people are like, okay, I'm taking profit, right? And depending on the number of people who decide to take profit, yes. Right. Oh, yeah, for that question right there, that's the squeeze indicator, right? So you go here to this is TradingView, right? It's called Squeeze Pro. SQZPRO. That's what it's see right there. That's the name, Squeeze Pro.
Gotcha.
So that's the one, right? Yeah. So if you look at silver right now, right? Sorry. Okay.
Like this looks like distribution from based on the squeeze.
Yeah, it's just, yeah, that's what it looks like right now, right? We can look at the weekly chart, right? And you can see kind of the move down, right? And again, the reason for it is because it has just blasted off. You can see that for the most part, right? Silver does not
Kind of like a
move, or
crypto
this
move.
particular, the trust, right? The silver trust does not move a lot. So for it to, to go from like 32 to past, close to 100 here, right? Or past 100 for a bit, right? That's a lot of move, right? And that does not mean it's going to, necessarily reverse and come back, right? But you have to recognize that people are taking profit, right? Like probably a lot of people who bought here and were patient, and then suddenly they're like, oh my God, my 401k has, tripled, right? Or whatever position I put in from my 401k has now tripled. They're going to be selling it off, right? Now, add all of those people together, and this is kind of what you get.
Yeah, when I see stuff like this, if I'm not already in it, I wouldn't touch it anymore.
Yeah.
That's my
Don't
take.
chase it, right? Wait for it to settle.
Yeah, maybe kind
Right.
of do some stabilize a little bit, some higher lows.
Yes.
Oh,
Right. Or for it to kind of form a base or something like that, and then look for it, look to go back in again.
yeah. If you can't draw like a breakout on its activity, then it's just you're just chasing it.
Yes. See, like in this situation, it was a breakout. You can see kind of going sideways, right? And then it kind of broke out here, right? So, like look at it. It's at 32, right? Maybe at, 40 or 45 or whatever, you're like, all right, it's time to maybe get it, right? So that's where you might say, okay, I'm going to the daily chart to see, if it kind of pulled back. Right. So in this situation, it kind of pulled back, kind of went sideways for a little bit, right? And then you might say, okay, yeah, consider buying, right? Generally, for stuff like silver, Bitcoin, and things like that, these are because silver, gold, Bitcoin, and all that are kind of alternative currencies to the dollar, right? So they don't tend to move unless there is fear, right, that something will happen to the dollar as a currency, right? So for this to blast off, right, there's quite a few people who bought this thing, right? So keep that in mind.
Kind of behaving like a meme coin.
Yeah, sort of, right? That's kind of the best way to put it, right? You can, I guess, if you're looking at silver, you can also look at gold, right? Because similar thing happened here too,
Not as fast, but still selling.
right? Yeah, because it was already so high, right? So the thing you can do with stuff like gold, silver, Bitcoin, right? They don't trade like stocks as much, right? They tend to go sideways for a long time before maybe blasting off a little bit, right? So my recommendation on these is to draw the Dorvis boxes and wait for a breakout on the Dorvis box, right? And then buy it, right? Unless you have money you're not using now and you can afford to have it be tied up, right? In something like this, which is also fine, right? That's also a great way to, kind of lower your risk, right? Like diversify, right? But in terms of diversification of asset classes, right? So some in your house, some in gold, some in silver, right? Some in stocks, right? So you're always kind of in good shape, right? So if you're investing in, say, silver or gold, right, having your money tied up for a while may not be a bad thing, right? If you need it for something, I would not necessarily recommend that. So,
Yeah, I think we have enough time for one more question.
oh yeah, sure. One more question.
And I think it's about the leaps management on shares. I'm not sure which one you want to do.
Oh, let me check. Hold on. Yes, Leaps management on shares. Oh yeah, yeah. So this one I recommend the book on
Yeah,
it, right? Written by
maybe
Jeff Weber,
maybe
right?
you can do like a summary version
Yes,
on, and then maybe
but
do a write up later because it's
uh,
pretty
maybe.
technical.
Yeah, yeah. I mean, it's like this, right? You can do the leaps, right, with AIM, right, on well, with options, of course, right? So the thing to do, and I'll go over because TQQQ was one of my big winners last year, right? I actually made about 30 grand on it, after the whole tariff news situation finished out, right? And what I did with that one was, when it dropped, right, and kind of went steady, I bought some more, right? And then when it dropped again, I kind of bought some more, right? Now, what I probably could have done is, when it comes to the AIM, right? You buy whenever, so for leaps, whenever it drops 30%, you buy, right? Like you have your half cash, half positions, right? So you basically take off, the 30% and try to get it to as close to 50-50 as possible with your cash and your positions. Right. So when it drops 30%, you buy enough to take some cash out and make it, back to the 50-50. Right. And when it goes up 30%, right, you sell off some and put it back into your short. Right. It doesn't seem like it will, that's the funny thing, right? It doesn't seem like it'll make money because, you're like, oh, I'm buying and selling or whatever. But as it turns out, right, it actually increases the size of both the positions and the uh, cash side, right? Now, if you want it to be a little more precise, you can use the weekly chart, right? And buy from the red to the yellow type of thing, instead of just saying, oh, you know what, it's dropped 30% or whatever, right? Now, especially if it's something like TQQQ, which is attached to the QQQ, right? That actually can work quite well, right? You can say, hey, I'm not going to do typical AIM method, right? I'm just going to, wait for it to go from the red to yellow on the weekly, and then buy as much as, maybe then do my 50%, kind of add back to the positions, right? That can also work, right? And if you're doing the stocks or the ETFs, generally the rule will be about 10%. So if it drops 10%, you buy some, right? You buy enough to do it 50-50 again, right? And when it rises 10%, right, you sell off the number of shares to get it back to 50-50. So again, rule for stocks 10%, rule for leaps 30%. So, and of course, if it shoots up, right, sell everything, right? Because with options, right, you have the implied volatility, right? So if it does a parabolic up move, just get out of it and wait for it to settle before re-enter, right? So I think that's all I have to say about that one for today.
I have a question about that. I think I can't remember if it was Anand's Facebook post or Henry's, but we had mentioned 3 different stocks, one of them being GGLL, the leveraged version.
Oh, yes. Uh-huh. I can look at it right now for you. Yeah.
Okay, great. Yeah. I just, because I did some research just so I could be prepared to understand what you guys were talking about today.
Yes.
And it looks like it's the general consensus is to use it for shorter term periods because they do some like manipulation in order to make the daily return double or 2x whatever the stock return. So here you're recommending it for leaps though, right?
No, not for leaps. Actually, this one I bought without doing leaps. I do the 10% rule on this one. So if it drops 10%, I buy it. If it rises 10%, I sell. Now, with this one, it actually ended up, because you can see right here, it just blasted off, right? So this one actually ended up doubling my account at this point.
Nice.
Right.
Yeah,
so I think I
want to chime in on that one. I know what you're talking about. Lakshmi. I think I'm sorry, I'm saying you're not
Lakshmi. Close enough.
Yes.
Sorry. I've seen that where if they're leveraged positions, then the way that the normal way to use it is you take advantage of that volatility because you're getting that 2x, 3x move. So it's for like a short-term trade. So day to day, it can be used that way. And
yes.
It wasn't until we talked with Jeff Weber and we saw that he was using this in an unconventional way, like a way that I never thought of. And then I'm like, this guy's either like crazy or he's onto something. And so Anand put it to the test in the form of not in options, but in shares.
Yeah, in shares.
So it was a new thing for us, and then it turned out that it paid off for Anand hugely. And then okay, so it can be used with that kind of buy when it's down 10%, sell when it's up 10%. So you're kind of like surfing the stock like based on its movement. So yeah, that's all I had to say on that one. Yeah, you go ahead.
That's right. And it actually ended up, like I said, I made about.
That's easy enough to. Yeah.
Yes.
Yeah, so it's hard because you got to remove the emotion out of it because you're seeing the numbers fly either like way high or low, and then you have to do the opposite. So that's the management part, which is pretty take practice, I guess you could say.
But I guess the other point was also the expense ratio is pretty high.
Yes.
So that can also eat into your profits long. But if it's kind of like a swing trading sort of thing, that makes sense.
Yeah, if you're holding it long enough. Right. So I mean these particular ones, they ended up making me like almost 40 grand over from May till December. So this the method is actually pretty good.
Yeah, this one, Anon, if you have time, if you can do just a write up, maybe like maybe like 4 transactions and how it looked. And
Yes.
that'd be a good post. I
Mhm.
Please, I want to hear about that.
think.
Huh? Yeah,
Yeah,
sure.
this one is a good win. Yeah.
Yep. So it actually, like I said, this one, uh, MSFU, right, has been going down recently because of the earnings, right? But it's actually still pretty good. I'm still kind of break even on it. So um, not too bad, right? But I've had to, on this downward path, I've had to buy more, right? So I'm going to have to, see what happens, in the next couple of weeks,
Once I start
Mhm.
seeing the yellow histogram, then I'm
Mhm.
gonna feel pretty good about what direction we're
Yes,
going.
exactly. Right. PSLL, right? So recent, up moves on Tesla has also, kind of added to my account there, right? Um, so, this one was
That looks
also
steady.
a
That looks
decent one.
steady. Yeah, it looks
Yep.
really steady. Looks like a
Yep.
lot more sells than buys.
Yes. Right. So that one, I think, it's up like 10 grand almost. Right. So yeah, these are good ones to buy, but you don't have to. Here's the other thing: you don't have to do this on the leverage ETFs. Um, Depending on your comfort level, you can do it on the underlying stock itself, right? Or um, on the leverage ETFs, or on the leaps if you have enough money for that, right? Um, so right, it depends on your risk tolerance and things like that. So
Yeah. I
yeah,
look forward to
yeah,
that
yes.
Anon, and we can share that with the group.
Yeah. You mean for just talking about the uh,
The
yeah,
GGL or
yes, sure. Okay, so I guess if there is no further questions, we can end it for today, and see you guys, whoever is able to make it next Sunday.
Thank you very much, guys.
Sure.
thanks everyone for
Have a good
joining.
night.
Yep. You
Thank
too.
you.
Yeah. Bye.
Night.
Good night. Just.